Welcome back everybody to my weekend update on the financial markets. My name is Jens. I trade markets since 7 years now and I'm here to share my experience with you and track my own trading decisions. We are a little bit in stormy times, at least the S&P 500 looks like it. I will directly start with analyzing it via price action, and after that US oil, gold and Bitcoin will follow, so stay tuned to don't miss any important notes on this 4 asset class. Now to the weekly and S&P 500 index. You can see that we are above the 200 moving average and the last all-time high from January 2022. That's bullish at the long term, but let's have a look at the short term. Short term, a secondary weekly orange dotted uptrend line got broken to the downside. That was really unexpected for me. So let's look at the daily time frame to get a more detailed view on the situation. I thought we would have in this third weekly impulse to the upside 3 daily impulses. We had 1 daily impulse, 1 daily correction, a second daily impulse, and I thought that would be the second daily correction followed by a third daily impulse to the upside, marking the end of the third weekly impulse. That was the plan, but sometimes plans don't work out like expected. We have seen a significant drop lower after respecting this as resistance zone and continuing higher, trapping me in the thinking that my plan works as expected. So now this arrow here, this green arrow marking the daily correction low, is not valid anymore. We have a new lower low. And yes, now is the question, is this a normal decline for a daily correction? In my opinion, it's not. It's a bit too much. This is a daily correction. This looks more like a weekly correction, but it's not the time in the cycle for a weekly correction. We are in the mid cycle of the third, at the midpoint of the third weekly impulse, and that's not the time for a weekly correction. So I'm fearful that we will see an overall shift in the market to the downside. That's at least a probability that's now in play. What do I mean exactly with that? If we get our arrow, there's a possibility that we will see declining lower to this daily support zone, maybe seeing a rejection back to the higher area, meeting this now existing daily downtrend line, and also the area where I thought was the low of the daily correction. And then we will see a break below this daily support zone and then continuation lower. Maybe price will get stopped by the 200 moving average on the daily, but I think even more likely is that we will see price declining to the last, we can see it better on the weekly, to the last high of January 2022, that we will find there somewhere resistance. What would also be fitting would be finding resistance around that area here, because that's the point where the weekly support zone and the weekly solid orange uptrend line will meet, and it's also below between the 0.5 and 0.618 Fibonacci retracement level, which is a good point where price normally finds support and change directions again. But I will cover that in future episodes if we get to that point. Back to the daily. Yeah, that's my bearish scenario. Because of that, I want to look with you on the 4-hour chart. Here you can see that I bought to my 20% already existing position in the S&P 500 ETF another 10%, because I thought that was the low and that from there on we will see a break of this blue dotted uptrend line, what we have seen. And I thought, yes, I'm a genius. I'm not. And then the pullback, and the pullback was not just a pullback, it was another leg of a huger correction. And because of that, I was also stopped out of my 1% at risk short-term long trading position. And yeah, the end of the red area marked the point where my knockout certificate got worthless and I lost 1% on the total account with this trade. That happens. It only shouldn't happen too often. So we can delete that one now. Yeah, my short-term plan is that I want to see this pullback I mentioned earlier, because we are a little bit oversold and also the 200 moving average is now reaching price, and that could be a good catalyst for again rising prices. And then here I have a mark where it rings on my smartphone if we get to this price level, and that would be also the level where I would think about selling all my current S&P 500 position, because I don't want to be part of it while we have this massive shift in the market to the downside. What would change my perspective about the market again to be bullish again? That would look like the following. We maybe test the daily support zone, maybe reject a little bit, make no lower low, and then break again this new daily downtrend line to the upside, make a retest to it, and break the retest again to the upside. That would signal me that this was just a fake out to the downside, a little bit huger daily correction, and that we will continue the overall uptrend. But it would be unusual, let's say like that. It's not my, it would be my favorite scenario, but in my opinion not the most likely. So I prepare for more bearish market movements, and you should probably at least think about it. Yeah, that's it for S&P 500. And let's switch to US oil, because also there we have some interesting price action and price areas. Oil on the monthly time frame, we can see we are above the long-term monthly downtrend line, and also at the currently at the area of the often tested support and resistance zone, and price currently gets supported by the 200 moving average. Let's drop down to the weekly. There we can see that after the break of the monthly red downtrend line, price moved into this weekly consolidation here, marked by the solid orange downtrend line. We see that still at the weekly, the 200 moving average is supporting price. Shortly we left the 200 moving average a little bit to the downside, but the orange downtrend line got broken to the upside, which is indeed bullish. On the daily time frame, we can see that price moved into kind of a triangle, and price seems to respect these areas of the white dotted areas, and I hope that that's already also the case now, but at least the statistical probabilities for that are a little bit higher. So I would like to be on the side of the statistical edge, so I would like to open up a position around this area and make a stop below the last low here. So if we see prices lower than that, that would mean that this triangle gets broken to the downside, which is a bearish sign, and that we will see then probably lower prices, maybe to this weekly resistance zone. That would be bearish, but at that area it would get again interesting and picking up some oil for the long run. My more favorite scenario, and I think more likely one, is that we will bounce from here again, like we did in the past a couple times, and again move back higher. Maybe price get rejected here again, or maybe we break out directly, make a retest, break the retest to the upside, and then higher prices will follow. That would be my scenario I want to trade next week. Let's drop down to the 4 hour time frame for that. Here you can see, by the way, that I sold my position at the moment where I got below my entry point of my 20% allocation. I opened up in the market as we have seen a break above the weekly downtrend line. And yeah, that was a good idea. We ride prices higher. I could have sold some of it at the moment we touched this triangle, but I wasn't aware of the triangle at that time, so I sold here to get no real loss in my position. That was indeed a good decision, because from there on price declined further. Here I said if I see a break to the upside, we have seen this break to the upside with these candles here, I would get interested in buying back into the market, but we have never seen a retracement to a little bit of correction, and I always like to buy the break above the correction. So we have seen a correction, but price never recovered and moved above it, so I never reopened the position, and that was the second good decision in this market, because price moved lower from there. So now I want that now at the moment where price touched this white dotted support line, I want to get back into the market, even if I haven't seen a break of the blue dotted downtrend line yet, because my stop loss is pretty tight. If we have a look at it, my stop loss would be around here, below this low. At that point I would get out of my position, and otherwise I have a good risk reward ratio, riding prices to the upper side of this triangle, and probably at the triangle, at the upper side of the triangle, I would scale a little bit out of my position in profit, and then hope for a breakout to the upside. Probably I will buy a leveraged certificate of US oil or a knockout certificate additional to it. Let's switch to not Bitcoin yet. Gold is the next one, because on US oil everything is covered, but a really interesting area you should pay attention to. Gold on a weekly, a success story so far. We are above the 200 moving average and the monthly uptrend line, as well as the weekly one. We left behind the often tested resistance zone, broke to the upside and skyrocketed from there, and now this would turn support if we get back below to it. So far it doesn't look like it, so let's switch to the daily time frame for more details. Also, the daily uptrend line is intact, the solid one, and the secondary dotted white uptrend line is also still intact. It seems like price left the range bound price movement to the upside, and we can see it even more at the 4-hour time frame. At least that's the interesting thing, to show you where I bought and sold positions. I got a foot in the door in the middle of the range with 10% of my account balance, because I don't want to miss the overall really bullish uptrend that I expect to continue for months, if not even years. And yeah, then we have seen the breakout to the upside. I was pretty happy, but then price sharply came back down to the middle of the range, and I was a little bit afraid that it's collapsing and we will see a push back to the lower span of this price range. So I sold my position of 10% a little bit above it, or at least price came down, then came straight back up, and I sold it. Then I got aware of this white dotted secondary daily uptrend line, and what was absolutely clear was this 4-hour blue dotted downtrend line. And I said to myself, and also in the last report, that if we see a price above that, breaking this 4-hour downtrend line to the upside, that would be bullish again for gold and the price development in the future. So I bought 20% of my account balance into a 2x leveraged gold position, and additionally opened up around that area here, a little bit below that, knockout certificate short-term position trading price to the upside with a stop loss of 1% of my account balance at the last low, and that would be also below the white dotted secondary daily uptrend line. So far the trade went well. I'm in profit with my 20% leveraged position. We are again above the daily resistance zone of the sideways consolidation zone, and all speaks to it that we will continue price rising higher. Maybe we get something like that we will retest again this area here, move a little bit around, and then break again higher to the upside. What should not happen now is that we will see again a break below this secondary daily white dotted uptrend line, a retest, and a break of the retest to the downside. That could mean that we will see again bearish price action back to the lower end of this range, and that would also mean that I'm getting out of my leveraged position and getting knocked out of my knockout certificate. I'm getting knocked out of my certificate automatically if we get prices below this last low, and I would also close my 20% 2x leveraged ETF position if we get below that, because I don't want to ride prices lower with a leveraged position in the counter direction. So yeah, that is it indeed for gold. So if you are bullish like me, maybe you can think about getting positioned here at this break to the upside. Maybe wait for a smaller correction to the downside, or if you are already invested just like me, keep it and look what price is doing, and be happy if we see higher prices, and think about selling some of it if we see negative price movements here. Let's switch to Bitcoin. Bitcoin on the weekly time frame. Here we can see we are above the 200 moving average. We have made a new all-time high here, but since then we have a little bit of a trouble getting higher. So we went into a consolidation zone. The orange solid weekly uptrend line got once broken to the downside, then directly price got rejected back to the upside above it. So that was the point where I was not far away from selling my Bitcoin positions, but then luckily I hold them. And if we drop to the daily time frame, you can see that I not only have hold my Bitcoin position here 20% at that time, but after breaking again above the daily, then turning resistance zone, and this here was at the time last report a downtrend line, and if we have seen breaking this criteria's weekly uptrend line, 200 moving average, a daily resistance zone, and the daily downtrend line all to the upside, I was sure, okay, this was a fake out and I want to be part of this bullish ride further in Bitcoin like we have seen in the past. And yeah, I bought additionally 10% of my account balance into Bitcoin. And yeah, that was also a good idea because we have seen prices riding higher from there. Let's remove that line again. It's not important anymore. But then, yeah, I got aware of this price channel. Price at the moment seems to respect it, and price declined from there and now is again at the lower end of this range. I hope this holds because it's again an important zone, 200 moving average, weekly uptrend line, daily support and resistance zone. So yeah, if that breaks again to the downside, that would be bearish. If we see a rejection here again to the upside, that would mean okay, price holds there, and maybe it needs a little bit more time to breathe for market participants, and then finally hopefully break this range to the upside and continue the overall uptrend, especially after the halving. That would be a good thing for the community and traders. What's my plan? I have now a really heavy position, 30%. It's the largest position in my account because I think Bitcoin has also the largest potential. But if we look at the 4-hour time frame, yeah, I will get a notification on my smartphone if we cross the 59,700 US dollar to the downside, and then I would have to think about reducing my position. I don't want to sell all of it because I think it has a lot of potential, and maybe it will price decline stops again here. But yeah, probably I will scale down because it's too much risk in my account and too much volatility if I hold it through all times. No matter what Bitcoin is doing, I want to make active trading decisions here and not only stick to my positive bias to Bitcoin. Maybe because it was one of my first assets, financial assets I ever bought, and that was the entry for me to get into this financial stuff. And now I'm here telling other people how to trade and read a price action. So yeah, I'm thankful for Bitcoin for a lot of reasons, but I'm working on it not to behave too much because of that in this market, but purely like solely on price action. If we see a break above this blue dotted downtrend line, a retest, a break of this really good looking 4-hour support and resistance zone, then I would expect again higher prices, at least to the upper range for Bitcoin, and hopefully then a break overall above it to new all-time highs. That would be the positive way. In this scenario, I would only hold probably my current Bitcoin position, maybe adding 5% max. I don't want to have more in it because then yeah, the risk profile of my account would not fit anymore. Then I could also solely invest into Bitcoin. It would maybe be on the long term the most profitable strategy, but also a more risky one, and I'm not here on this YouTube channel for that. Yeah, what would be the negative way? We maybe get a little bit higher, retest this blue dotted downtrend line in combination with the 200 moving average or something like that, and then break my area where I get a message on my phone to the downside, make a retest to this daily resistance zone then, and continue lower to the lower band of this price channel. No clue what price will make from there. The statistical edge would be that we will expect here a turnaround back to the upside. We can play that one. I would cover that if I want to in future episodes, if it makes sense in my view. But price can also decline further because we would absolutely left behind this weekly uptrend line if we get to this point, and then it wouldn't be far that we will see prices again at this resistance zone here, support zone at $4,200, and I don't want to write prices that low. Before that I want to sell all my position. Yeah, so at the moment we got below this area around $59,700. I would think about scaling down my position, and maybe if I see further decline, a retest and the broken retest to the downside again, maybe get completely out of Bitcoin and think again about collecting some Bitcoins around the area of the lower side of the price channel, in combination with then maybe here broken downtrend line to the upside. That would be probably a good idea to re-enter the market. But at the moment I'm fully invested into Bitcoin, and I will change it if we see it a couple hundreds of dollars lower. And I hope that, where was the line before? There was the line before. They will see a break to the upside, and I can keep my position and maybe add additional 5% to it. That's it for Bitcoin. Let's shortly have a look at my Excel sheet with all my positions, so you get an overview about my trading. Here you have it, the Excel with all my trades. What have been the new ones? The new ones have been that I opened up a long position, 10% in the S&P 500 index, that I probably will sell if we see a small rebound to the upside to get a better price of my selling, and then reduce the overall position. Here you can see my short-term speculation with 1% of my capital to the long side. That went against me, so I lost 1% of the account balance, so ending up with 102.13% account balance, so 2.13% in profit. I opened up a new gold position with 20% of my account balance, 2 times leveraged, and also a knockout certificate with 1% of my capital at risk, still both in profit, but I will calculate it if I close the positions. So there you have it, 20% still in cash, 30% in S&P 500, which I will probably reduce, then 20% in gold, a bit leveraged, and 30% in Bitcoin. We will see what the market makes with the price, and after that I will decide if I reduce or scale it up. Yeah, that's it for the weekend report. Stormy times, a lot of decisions to make. Normally, if you make this kind of trading and portfolio management, you have to do 1 or 2 times a month a decision. At the moment, a lot is going on, but I keep you on track and will inform you next weekend. So subscribe to the channel and you don't miss any updates. Bye bye.